Hello everyone, my name is Jeremy. Welcome to Block and Key. Today is June 13th, 2019. There's a few things I got packed up here for you today. One is the Bitcoin rise. It doesn't look like it's quite rolling over yet. I still anticipate by the end of this month we should see it roll down. We also have crypto exchanges are now going to face their greatest hurdle yet with the Financial Action Task Force and what that means for crypto exchanges around the world, as well as some confiscation measures on people's wealth in Italy, where they're actually trying to go after people's savings in safety deposit boxes. Well, this is all bullish news in my opinion, and hopefully we can touch upon this, and I'll see you in a moment. Stay tuned. Block and Key. So as in one of my previous videos that I had mentioned, I was anticipating that Bitcoin was going to probably roll over in around May or June. I was expecting only around the mid 5,000 region, somewhere in the fives. I didn't anticipate it to go parabolic, as you can see here. It went parabolic. No one was really predicting it at that time. I'm still surprised, but you know, hey, it's crypto. Anything's possible. As you can see here on the daily, we've had our golden cross. I was anticipating we would have probably started to roll down by now, but it looks like we have a head and shoulders pattern here. Not that I really think that means much, especially with Bitcoin. But yeah, like we have just blown past the 200 weekly moving average down here. I still expect a retrace as we approach down into fall. By that time, I expect the 200 weekly to move a little bit higher. If we can get back down, that would be great. If it just keeps going crazy, I'm okay with that too. I just keep building on my wealth position in Bitcoin. So yeah, it's gone a little bit higher than I anticipated, but it's starting to look like it's getting exhausted. I still expect a retrace as we get down here into fall. I could be wrong. It's not financial advice, but that's what it's looking at. Again, I still predict probably by year end, beginning around 2020, if this does pull back, we're probably looking at $8,000 to $10,000 US Bitcoin, probably by the end of the year. And then, of course, we get into the halving, which is in May 2020. By then, it's anybody's guess. The fundamentals for Bitcoin have never been stronger. Institutional investment is coming into this space. There's a lot of positive news and some negative ones as well with regards to regulation, which we're going to talk about a little bit here in this video. So yeah, this is the charts. Still going. Would I recommend buying at this point? Probably not. As I said in my last video, dollar cost averaging in is probably your best bet at this point. For me to buy any substantial Bitcoin, for me at this point, I'm not acquiring anymore. I acquired a bunch down in here late last year, and then again early in February, as I showed you in my last video. Anytime I see parabolic rises, I don't trade at all, and I certainly don't buy into a FOMO. I would like to see a nice correction of at least 20-30% from current levels minimum before I would probably myself put in some substantial cash to purchase Bitcoin, because this is pretty exciting. I wasn't expecting it to rise this much. Now, this article is a couple of days old. It was published on June 11th, 2019, and this is from Bloomberg, okay? And the crypto exchanges are facing their biggest regulatory hurdle yet. And I'm sure you've seen some of the other crypto YouTubers talking about this. And this isn't new. This was brought to light several months ago, I think maybe even late last year, of what they intend to do. And it's the Financial Action Task Force, which is a conglomerate of countries that basically have reached an agreement to prevent money laundering. And there's safeguards and standards essentially that they're going to do. But this is a big one yet, because they're going to start to tighten the noose down on getting out of the fiat world and into crypto. Because once you leave the fiat world and enter into crypto, very rarely do you need to come back unless it's to acquire profits. So this article here talks about this, and it says here that on June 21st, the Financial Action Task Force, a multi-governmental effort that develops recommendations for combating money laundering and financing of terrorism. Of course, it's always done to protect you. Terrorists are just lurking under every rock. Of course. About 200 countries, including the US, will publish a note. Okay, so I want to stress this, and this one, because there's a lot of FUD going around the internet that are going to do this, and all this is going to become law within 8 days. It's not necessarily true. This is just a note on a framework that they're planning to implement. And this is done by on a nation basis per country. We'll publish a note to clarify how participating nations should oversee virtual assets. FATF spokeswoman Alexandra, I'm not going to pronounce that, Daniel said in an email. So what they're planning to do is they have a framework that they're going to try to build upon. And all these 200 countries that are part of the Financial Action Task Force are going to come to some kind of guidelines on how they're going to enforce these rules in their country and their jurisdiction. Now I'm not going to go into great details on this. You can look this up. I'll have most of the links in the description below. But it says here, the guidelines will require companies ranging from exchanges such as Coinbase, Inc. and Kraken to asset manager Fidelity Investments to collect information about customers initiating transactions over $1,000 US or 1,000 euros, as well as details about the recipients of the funds. Now, this is the part here that's key. This isn't just about normal AML KYC when you sign up to an exchange, so that you can transfer crypto assets, cash out, or fund with fiat and purchase crypto. Here they're saying that so you already have an account, you've done your KYC AML, and now you want to purchase some crypto assets such as Bitcoin, and you want to transfer it to a wallet. Well, what they're saying here now is once you partake in one of these exchanges, they want to know the details of the recipient's funds. How are you going to track what wallet you're going to? This doesn't make any sense. So you're going to have to do, essentially what it sounds like, the government is trying, or not the government, governments of the Financial Action Task Force want to set up like another KYC AML for your public wallet that they can watch then. How this is going to work, I'm not sure. But again, as I said before, this is a note, to publish a note to clarify where they're going. This doesn't become law immediately or anything like that, so just ignore that FUD. So, as well as details about the recipients of the funds, and to send that data to the recipient's service provider along with each transaction. So all this is going to do is just going to be more of a proof case for decentralized exchanges. I feel sorry for Kraken. I like Kraken. Coinbase, I had a bad experience with them years ago. Obviously, they're trying to keep track of everything. The regulatory compliance that's put upon them, that burden, is probably tremendous. I do feel sorry for them, and a lot of times I do think they probably get a bad rap, but it's probably not all their fault. It's just there's so much government pressure and oversight on them. Like anything, government always hurts innovation and business. But anyway, and I thought this was interesting, and I wanted to highlight this out. Without enhanced technology systems, this is a case of trying to apply 20th century rules to 21st century technology, Buchan said. There's not a technological solution that will allow us to fully comply. We are working with international exchanges to try and come up with a solution. So, and this is, I think Buchanan here is from Kraken, but what they're trying to say is basically that this guide, this framework, this rule book that just come out, they're trying to bring us back to 20th century mentality. It's ridiculous. The 20th century banking system is what's caused all these problems, which gave birth to Bitcoin. so that we could escape this fraud of fiat currency, where banks print money out of thin air, charge you interest, and then if you can't pay it back because you lost your job, then they take the asset that you purchased with money they gave you that didn't exist in the first place. This is phenomenal. Hopefully some countries will just take this, and then I wouldn't fear this too much at all, because there's a lot of crypto wealth out there, and any intelligent money is going to have some position in crypto. And all countries and jurisdictions are going to do is they're just going to establish their own jurisdictions and guidelines from what they want to do. You're seeing it with Malta. You're seeing it with some of the islands in the Caribbean. Paraguay, where I'm a permanent resident of, is very pro-crypto. You'll start to see jurisdictions pop up where a lot of this stuff isn't really going to matter. So I wouldn't put too much, and I certainly wouldn't fear this. The rich, our current system is designed by the rich for the rich. And if any rich people are getting into cryptocurrencies, predominantly Bitcoin, they will have an escape hatch for themselves somewhere. Guaranteed. This concept that the rich are going to pay taxes is ridiculous. If you believe that, you really need to do some investigating journalism on your own and realize that's not how this system works. There's a reason why there's offshore tax havens and have been for decades. The rich don't pay taxes. They don't pay taxes. Very, very few. Look at Monaco. What do you think Monaco is? Why do you think so many people live there? It's what? Monaco is 3 kilometers long, and it houses the most millionaires and billionaires on earth. The place is only like 10 square kilometers. And why? You don't pay taxes if you're a resident there. So don't fear this stuff too much, but it's good to keep on your radar to see where things are going. And these types of news events allow you to plan strategically. Now, this article is interesting. It was posted yesterday. And this is from Reuters. This isn't my opinion or some crypto magazine or website. This is from Reuters. And Italy proposes tax on savings hidden in safety deposit boxes. So why would your savings be considered hidden? Well, as you've seen some of my other previous videos, one I did a few videos ago, we're going to negative interest rates. Once we go to negative interest rates, they don't want anything hidden. They have to take us cashless first. Negative interest rates only work in a cashless system that's controlled by the bankers and government. There's no escape from it. So now they want to tax people on savings hidden in safety deposit boxes. So if you've saved some money or inherited some money, this isn't just cash. This is anything. This could be jewelry, diamonds, a pearl necklace, family heirlooms that you put into a safe place in a bank. Well, the Italian government wants to tax you on it. This is just yesterday, June 12th. And this is what they've actually said. Money that is substantially hidden, he said, suggested that deposit boxes were a way of hiding income and assets from the tax authorities. So let me get this straight. What they're telling you is you need to be forced to put your money into a negative interest rate account by the banks so they can purposely devalue and take money from you constantly. This is where we're heading, folks. Like, if you are still in denial about what's happening, watch some of my previous videos, get online and get informed, because we're going to move into an Orwellian nightmare beyond your wildest dreams. Like, this is craziness. And then there's the solution that the government says here. Those who voluntarily declare their deposit box holdings would be taxed now at a low rate of only 15%. So just think about this for a moment. You've worked hard. You've saved some money. You've already paid your income taxes. You've already paid your property taxes. You're already taxed on everything you purchase, depending if it's VAT. I think it's in Europe, it's called VAT. In Canada, it's HST. The US, there's sales taxes, depending on state, jurisdiction, county. The tax system in the US is a nightmare. And I know that for a fact. because the software firm I used to work with. So then you have some leftover money. Say you bought a gold necklace for your wife or your girlfriend, or in fact, you were handed down some gold items or some cash. You're like, well, I'm not going to put it in the bank account. One, you can't put gold jewelry in a bank account unless it's in a safety deposit box. Two, if you have cash, why would you want to put it in the bank? Well, they charge you fees and they give you no interest. So not one are you getting eroded from and annihilated by inflation, where everything keeps costing more. Now they want to like charge you a tax on just putting it in the bank account. So now they're coming after your safety deposit boxes. Your best bet now is just to either, you have to internationalize your assets. Like there's no point. That's why I became a permanent resident in a South American country years ago in Paraguay, just so I could avoid this. This is textbook. You can see it coming. It's not going to happen next week. You're not going to wake up one day and, oh, they're coming. But this is a blueprint from what is the future of your life. So they're coming and they just won't seem to stop. It still amazes me how people are in denial on what these governments will do. And this is a G7 country. Okay, this isn't Iran. This isn't Cuba or China. This is Italy. Government is bankrupt. And I'll tell you right now, all Western governments are bankrupt. Canada included, they're bankrupt. There is no money. It's all debt. And until you realize that, sorry, you're going to have to start paying attention here, because they're coming for your money. With the crypto lockdown, the noose that they're trying to tighten, this is just bullish for Bitcoin. I was expecting Bitcoin to roll over in June, and now it's up to around 8,200. It might just go higher, because there is no limits to government theft. It's absolutely mind-boggling. And as I was saying before in some of my previous videos, I believe the stock market is going higher. Stock market is going to go higher. And here's an article from Market Watch. It's a couple of weeks old now. Well, maybe a week, June 7th. Dow closes up 263 points. Stocks notch best week of the year as job report fuels hopes of a Fed rate cut. So the economic paradigm is completely flipped upside down. It makes no sense. So the US reported a lower number of jobs created, and the stock market vaulted higher because they want more easy money. The financial system died in 2008. It hasn't been the same, and it won't be the same. We've embarked on quantitative easing and endless money printing. The goal is to inflate and inflate and inflate. And I know it sounds like I sound like a broken record, but it's obvious of what's happening. So again, this is from Market Watch, June 7th. The U.S. economy added only 75,000 jobs in May. Well, May is springtime. This is when things are supposed to pick up. I understand, things have construction, a lot of jobs taper off in the wintertime, but this is May. That's not a good number at all. The U.S. economy created 75,000 new jobs in May, well below the expected 185,000. Think about that for a moment. They were expecting 185,000 jobs, and they only created 75,000. Weakening economic data support argument for a cut in interest rates as soon as this summer, which I may get into, but we're getting rate cuts and we're going to more QE. Major benchmarks notch best week since November. And then it says here, the U.S. stocks closed higher Friday, following a weaker than expected jobs report, which supported the case for the Federal Reserve to ease interest rates in the near future amid fears that the U.S. economy is decelerating as trade tensions between the U.S. and counterparts in Mexico and China persist. Now, this is all theater, but so just take this in bad economic numbers. Stock market vaults higher. They want more QE. They have to print more money. They have to. Stocks, bullish. The jobs report follows the smallest increase in private sector employment in 9 years. In 9 years. Okay, the last financial crisis was about 11 years ago. So right around the financial crisis in 9 years. That's not good, folks. According to payment processor ADP on Wednesday, which showed that the private sector added 27,000 non-farm jobs in May, representing the weakest growth since March 2010. That's not good. But have no fear, more easy money is around the corner. Another thing that people haven't been paying attention to, they're always worried about the stock market going higher, as the stock market is a gauge of economic prosperity, which is not true. Here is, again, not my anything conspiratorial. This is from stockcharts.com showing the yield curve. So as you can see here, a 3-month bond provides more yield than the 2-year, the 5, 7, and even the 10-year. And it looks like soon, not too much longer, a 3-month bond will yield more than a 20-year, which is crazy, which means we have an inverted yield curve. Okay. Now, if we go back, if I drag this down to here, so right before the financial crisis, so after the dot-com bubble, you can see how you have the low end of the curve here, okay? Normal environment, a longer term bond, which most pension funds use for people that want a secured income, will purchase bonds. So if you're a working adult, I'm sure you're aware that when you're younger years, you're supposed to be more of aggressive on your investments. So you have a basket of equities, bonds. If you're young, you don't need too many bonds, but you should have a small portion of bonds because it's protected. It's government-backed security, right? But this is what happened just after the dot-com bubble. So if we come here, I'm just going to drag this slowly so you can see, and watch the dates down here. As I drag this bar, watch the yield curve. So as you drag the bar, oh, inverted yield curve. Look at that. The 3-month, look at the percentage point. The 3-month is yielding more than the 20. And of course, you get a crash. Boom, the dot-com bubble blew up. So then the Fed has to aggressively lower interest rates. So you see how the low end comes down to get this curve back up. And look what happens. So this low end of the yield curve is way down here, which is great. A 20-year bond is going to yield you more percentage, right? You go through the bottom, and wow, bonds are great again. But of course, things blew up. And if you're in equities in the dot-com bubble, you would have lost a lot. And as things progressed, we get scooting up here, and look at that yield curve on the left. See that? Oh, inverted right around there. Oh, but then they were able to flatten it out. Oh, now we're going inverted again. Inversion. Inverted yield curve. Boom. Financial crisis. Massive lowering of interest rates. Trying to get that low end of the curve, but then it's too late. Everything's going in free fall. It's too late. And as you can see, through this whole expansion of quantitative easing, money printing, inflation, here we go again. Another cycle. The yield curve, the low end's down. It's all hunky-dory. Everything's going great. And we get up to roughly where we are now. Inverted yield curve again. It's inverted. It's almost cheaper to buy a 3-month bond than it is in 20 years. So chances are a recession's coming. We're not going to see it next week, but it's here. When, I don't know. But if you're a stock market bull, bonds are not looking too good. So you're going to probably want to play it safe somehow. Precious metals will probably do good. Gold, silver. People hate gold, but gold is going to do good because we're going into a recession. Usually, I believe it's 12 to 18 months. Once you have an inverted, and this is bad. This is a bad yield curve inversion. Once this happens, usually within 12 months, you're in a recession. Because like I said, remember, once you're flat or inverted, okay? So this is 2006, 2007, you're inverted at this point, right? But the crash doesn't happen until several months later, usually 12 to 18 months later, and then boom, you get a crash. By the time they catch up, the Federal Reserve and all central banks decide to lower their interest rates. They're trying to get the curve back down, but by then it's too late. Things need to wash out and cleanse, and then boom. And then at the bottom, that's when you buy bonds, obviously, because everything's crashed. So we have an inverted yield curve. That's today. That's where we're at. And even if they can bring this low end of the curve back down, it's inverted. So it's just a matter of time now. I'm not sure when, but you better get your hands on some crypto. Not financial advice, but that's what I'm doing. So now you understand a little bit of what's happening with the inverted yield curve. If you've been working for any length of time, you're probably aware that when you're younger, you're supposed to be more actively investing and aggressive on higher yielding assets, stocks, equities, things like of that nature, yet still allocate a small portion to bonds because of the safety play. As you age and as you get closer to retirement, you're supposed to reduce your risk exposure to equities and purchase more government bonds as it is a safety play, even though the yield that you're going to get on a government bond is much less than what you could get after you're chasing after the stock market. And like I was saying here, anytime there's a major correction, the yield curve flattens and then you get a crash. Right now, near this end, we have an inverted yield curve. So pension funds, whether public or private, have to chase higher yields. Because look at the difference. So before the 2000 dot-com bubble burst, look where we were as a percentage on bonds. Look what happens when we're here just before the 2008 financial crisis. We're down to 4.65. And look where we are today, 2.32. See the trend? The low end of the curve is continually dropping. And pension funds are now forced to chase higher yield, riskier assets that produce a higher yield. Bonds aren't doing it anymore. So I want to play this clip here for you. It's very interesting, and hopefully you'll learn something. It is kind of dry, the whole video. I recommend to watch it if you want to understand how money management works. This individual's been in the market for 30, 40 years, very smart man, and he's just explaining to you what they're seeing right now. Pension funds have no choice but to chase higher yield.
And now another thing is the Detroit bankruptcy. How much has that influenced the next exuberance in investing in these needed-based investments?
So the Detroit bankruptcy has actually radically changed the tenor of this credit boom. In the prior cycles, the 1990s with WorldCom and Enron, the next cycle was subprime, we did it purely with leverage. But now we're doing it with increased taxes. Because until Detroit went bankrupt, nobody really cared about pensions because most state constitutions guarantee pensions. Once you give a pension to a police officer, firefighter, teacher, you can't cut it, you can't eliminate it. You just have to keep providing for that pension. But then Detroit went bankrupt and they filed in U.S. bankruptcy court. And the judge says, yes, I know the Michigan Constitution protects your pension, but you filed in U.S. bankruptcy court, and U.S. law trumped state law, so the pensioners ended up taking a hit on the unfunded liabilities. And since most pensions are only about 2/3 funded, that sent shockwaves through the public labor union movement. And since then, they've gone to every major state, and every major state since then has either raised or is thinking of raising taxes to try and narrow this funding gap in our pension system. And the result is overwhelming. Every month I track pension votes going into credit from these new tax flows. The chart I do goes up and to the right. It's now growing faster than the average annual value of the federal tax cut that was passed in 2017. In other words, we did $1 trillion tax cut over 10 years. That's $100 billion a year. State and local taxes, just for pensions, are now growing at more than $115 billion a year. So fiscal policy is actually negative now. That's one more reason why the economy's cooling. But this money goes into levered credit. And it comes back to the stock market with 5 times the buybacks, because that's the leverage they start to employ. And so if you're a fundamentally based investor, you're looking at a historically slow economy relative to prior decades and prior economic cycles. Yet we're putting more money to work than ever in credit and doing it on a leverage basis. So you get one of the greatest stock market bull markets in history.
That everyone hates.
That everyone hates because it's way outpaced the economic fundamentals because of these new inflows of money at the state and local level.
And
So you can see what he's describing, right? Like, this is really happening. I don't know how else to say this, but taxes are going up. Stock market's going up. The value of your money is going down. Pensions are unfunded. It's too much debt. They just can't fund it. So we're going to hide your money. I showed you here the yield curve. It's inverted. So we're heading into a recession. Bad economic news means stock market higher. Like, you can't make this stuff up. Italy is now going after you saving your money in a safety deposit box. And they're coming after the crypto exchanges as well. All in the name of fighting terror and anti-money laundering. Of course, anyone that's not new to this space knows that the biggest fraud and criminal organization going is the bank. They print money out of thin air so you can buy your house. Then if economic troubles hit, such like as an inverted yield curve and an economic crash, and then you can't pay back that money that was created out of nothing, the bank takes your asset from you. All on something that's magical. The biggest criminal here is the bank. It's not people trying to be criminals, money laundering, trying to get around taxes. It doesn't matter even if you're a law-abiding citizen anymore. You're stuck in a pension that's basically a Ponzi scheme fraud. You got stocks that continue to go higher because of bad economic news. They want cheap money, more money printing. Then if you try to save and hide any of your savings after you've already paid your taxes, well, they want to come and take that too, or a portion of it. And they're starting to tighten the noose on crypto. This is bullish, bullish. I'm going to say this again. Stock markets higher. Bitcoin even higher long term. Stock markets may come down. There may be a panic. Have no fear. Have no fear, because they're going to print, and they're going to print and print. And you better hope that you have some of your wealth hidden. It's not a crime to prepare for the future. It's not a crime to want to preserve your wealth. It's yours. It's not the government's. I don't care what they say. These people are criminals. What does he do? Nothing. Now he wants your savings? This is rampant through the Western world. All G7, 20, I did one of my previous videos, even in Canada, they have bail-in regimes all ready to go. I don't know how many more videos I'm going to do. I'm going to be totally honest with you. I never did this to start a big crypto channel. Maybe once if I'm relocated, but I am a permanent resident in a South American country, Paraguay. That's where I plan to go to escape this. It just never seems to end. Do I ever want to own a house here in Canada ever again? I have before. No, what for? It makes no sense. You'd just be taken and taxed from me. There's different ways to get your money out of your nation. Crypto is one. Cash is going to be difficult because they're clamping down on everything. They're going to tax you. Precious metals are a great store of value, but again, you can't travel with it. It's very, very difficult, or it'll be confiscated. Crypto is the best asset that you can do that with, and there'll be plenty of other countries in the world that will welcome you. I want to do one more video, hopefully here within the next month, on tax-free tour. how offshore banking works, why it's not a crime to not want to pay tax. I'll probably even put in some videos of Donald Trump saying, well, not paying tax is smart because taxation is theft. Okay? Like if you want to have a VAT on, you want to purchase an item, that's one thing. Even property taxes to a certain degree, I agree with, but like taxes on your income and on your savings, how can you be taxed on something that you've saved? Like this is incredible. So be prepared, buckle up, good times ahead. If you're already in crypto, good for you. We're going to do great. And if you're in some of these unfunded pension schemes, boy, oh boy, you better buckle up because it's going to be a wild ride. I have a feeling you're either going to take a massive hit or you're not going to be able to redeem what you're promised. So till next time, have a great rest of the day. Enjoy the summer. And hopefully in next month, end of July, I'll do another video. Be prepared. It's going to be a wild ride. I'm still expecting Bitcoin to roll over and head down as we head into fall. But if it goes higher, okie dokie. I'm all right with that too. Till next time, take care. Have fun.